life, every day, late at night, not okay. All I want.
Welcome back. So we are here again to chat through our real estate stats. What's happening still with the Denver Metro when it comes to our real estate numbers? So, as always, joined with the very talented Brenna Harper, as her company, Land Title, puts these stats together for us in analyzing, well, at least putting the numbers together. We get to analyze it, kind of chat about it,
Yeah.
all the cool stuff that's happening there. So, Brenna, go ahead and introduce yourself for those who may not know you.
Well, my name is Brenna Harper. I am a sales rep with Land Title Guarantee Company, focusing mostly in the Lodo Highlands area, but so that's my territory. But Land Title is all over Colorado, so happy to help wherever you're buying or selling.
Yeah. And again, right, as you're watching the video, type your name in the chat box. Let us know that you're here. If you've got specific questions, anything you want further information on, right? That's how we know what to talk about. So now, Brenna, let's talk for a moment about fraud. This happens a lot in real estate. This is a big deal in areas people may not think, right? It's hard to like steal somebody's house, so to speak, but man, they're sure getting creative with fraud. And you and I had a recent experience sometime last year. We were selling your car.
Yep.
And the car was stolen, right? They gave us a bad check.
Yeah, it was actually a really good fake check. So it was a certified cashier's check. So, coming from the title world, a cashier's check is very secure. Obviously, the people checking our checks are much better than me because I did not spot the fake. But it was watermarked. It had the perforated edges. It had everything in the right spot, but it was in fact a fake. But I recently got a call from the Thornton Police Department, and they found my car. Excuse me. So the guy or guys that took our car turned around and very quickly sold it on Facebook Marketplace, which I was mad about because we tried to put out as much notice as we could, even on Marketplace, but they ended up selling it to a couple in Aurora, and the detective or a police officer pulled the VIN and figured out that it was a hot car. So unfortunately for those people that bought the car, it was taken from them. So, definitely fortunate there was no violence involved, and the insurance took good care of us. I feel horribly for the people that bought the car. But, the detectives told us initially that these were pretty sophisticated criminals. And unfortunately, I think we've talked about this before, but there's a lot of fraudsters or whatever you want to call them, and they're very intelligent. So, they're not using their powers for good. And I definitely fell for it, but we are also seeing it in the real estate space, most prominently, I think, in wire fraud. So Land Title has very strict policies on our wire fraud procedures, and we stop attempts several times a month, if not weekly. And it
share that again, right? How often are you stopping fraud from happening?
Several times a month.
Wow.
So, and it could be, just an email that they're just trying to kind of fish and see how far they can get. So I'm not saying like it got all the way to where someone's sending their money, which sometimes it gets pretty darn close to that too. But one of the more recent attempts that I heard is that they had called the buyer and had several conversations with them. And so the buyer thought that they were the closer. Now, when they talked to the closer and they said, oh yeah, this is your number, it was out of state. Land title happens to be local. So that was our first red flag, but he was convinced that, well, my closer said this and my closer said that. And we're like, that was not her. So they can also, I don't know what the technology is, but basically like use Matt's phone number and call me. So it looks like Matt is calling me, but it's actually not. So a lot of times when we are confirming, we'll ask people to call, like hang up and call us back on the number that we have previously provided or that's on our website. And I always tell people, if you get a weird feeling or if you just want to be sure, always double check. We're never going to think that you're wasting our time or that you're being silly. If you want to, if you take those extra precautions, or if you ask the question, hey, I got this email, it seemed a little bit weird. And they track them, they track emails. So, there might be someone tracking Matt's or my email right now, and they just wait for keywords and key opportunities and then come in as the fraudster. So, it's just, it doesn't matter if it's $1,000 or $1 million, it's earnest money or down payments or anything, whatever. But like we've talked about before, it's not like a credit card where the credit card company can just refuse the charges and refund you your money. A lot of times they're gone. They're in a bank account or, it's gone. So, people work really hard for their money, and buying or selling a home is one of the largest financial transactions a lot of us make. And we don't want, to get in too big of a hurry to pay attention to this, because it could really wreck your week or your month or your year. So we're doing everything on our part. We ask that our agent and lender partners also do everything. I kind of joke that it's like, well, if your parents told you something and you only listened when it was your aunt and uncle or your whatever, like if we can tackle it from all sides, maybe we can keep it from happening. So, if anything doesn't feel right or if you have questions, just double check.
Yeah, I mean, right. Walk through this scenario real quick. You have been in your house for, say, 7 years, great appreciation over those 7 years. You sell it, you're all excited about moving into the new house. You decide to wire transfer the money, and you get wiring instructions. You send it there, and then come to find out it wasn't going to the title company, it was going to a fraudster. And there goes $150,000 or $250,000 just poof. Right. And it leaves that bank account, goes to another bank account, goes to another bank account, whatever these criminals do. I don't really know. I've never been shady that way into how they do it. Right. But that would be a devastating moment to know that money's just gone. Now, for our car, right, when you and I sold the car, very fortunate we had insurance in that scenario to step in and pay for the car.
Absolutely.
The buyers that bought the car and probably gave cash, several $1,000s worth of cash, there was no auto insurance or cash insurance on that money being stolen. So they're out, right?
Right.
So be very cognizant of information that's coming through. Who's providing it? What does it sound like? And look into some of the details, especially when it comes to wire transfer. We've got a document we provide our customers that goes through a whole list of things. One of the things it covers is wire fraud. Let's be very, very specific on how we're going to transfer money, and a lot's transferring in a small window. So it's profitable for these fraudsters. That's why they do it, and let's try to make it very difficult on them, and hopefully they get caught when they can.
Yep.
So real estate, some things are changing here with our numbers, right? I mean, it's a different story. It's a completely buyer's market now. There's so much inventory. It's just a walk in the park.
Yeah, it's amazing. You just, take your time and think about it. And yeah.
Yeah, and for those that have been watching our podcasts or live videos in the past, that's not been the message we've been delivering, and that's not our message today.
No.
So, you want me to pull up your stats, and we'll screen share this here real quick?
Yeah.
Okay, perfect. All right, so let's hit the highlight reels. What's happening for our March numbers? Now, again, we're looking at March numbers because we're here in April. So we're looking back at the month that was March 2021.
Yep. So for March, we had just over 5,000 sold listings in total for detached and attached homes, which is up over 30% year over year. About 1,200 more homes sold in February than sold in March. Or I'm sorry, 1,200 more homes sold in March than sold in February. And we're up 11.7% year over year. The interesting thing about this, however, is that we had 5,500 new homes come on the market, which is less than the previous month. But we are just absorbing inventory so quickly that our active inventory, and I'll show you this in a minute, is still decreasing. So our active inventory is going this way, our sold and under contract or pending are going this way. And so it's just really making it feel pretty extreme. Case in point, the percent of list price to sold is 104% for detached single family. So to put that into dollars and cents for you, the average sold price in Denver for detached single family is just at about $663,000. That means that on average, it's about $27,000 over that price to get it purchased. Now, keep in mind that that's an average. We've seen it a lot higher than that, and we've also seen some that are lower than that. But that's a really great conversation to have when you're looking at buying. We don't want to be looking right now at the top of our price range or price comfortability, because we're more than likely going to have to go above that price. So if you look at something that's $660, you're now going to have to go up to $680, $690. Are you comfortable with that? So, kind of using that metric of about 4 or 5% above asking to say, am I comfortable going above that? Or do I need to shorten my search a little bit or adjust my search rate range so I can set myself up successfully? This next stat is, did you have something to say, Matt?
Yeah. So before we jump into that, right, when we look at historical kind of average appreciation, that number is give or take around 4% for the course of a year. Now we're talking about from the moment it gets listed to going under contract, saw a year's worth of appreciation for historical average. Now, that's a matter of days. Right. And then when we compound the other homes that are coming on the market, you and I had a conversation with a friend of ours who's in real estate. He's an agent, and having the conversation with his clients that they had about 3 weeks to get into the neighborhood they wanted to, because they were searching into a price point, wanted to be in a specific neighborhood. Well, over the course of the next 3 weeks or 4 weeks, when those homes that they just missed out on closed and they went for 4%, 5% over list price, the next home's coming on the market, that becomes the new baseline.
Yeah.
That's now where they're starting, because my neighbor got it, but my home's way nicer. Why shouldn't I get more?
Right.
They're going to increase their price at that same level. That's an astronomical increase.
Yeah. And I actually was talking to a client friend yesterday, and she said that there's a builder in town that is now increasing their base price every 2 to 3 sales. So it's not every 6 months. It's not every 4 months. It's every 3 homes they put under contract, they increase the base price.
Which may happen over the weekend.
Right. Yeah. So, and that was the conversation that this this client was having with her customers was, you can wait on it, but if they do one more contract, it's going to increase that base price. And then what does that do to your buying power? What does that do to your design center and all of those things? So things are just moving very quickly. And I think, it can be very overwhelming. But seeing some of these numbers, it can be overwhelming. It can be mind-boggling, but it's hopefully setting some expectations so you know what you're walking into and don't feel totally rattled and just totally sideswiped. Like, okay, I knew what I was walking into. It's still nuts, but at least I know it's nuts.
Yeah, right. Crazy. If I understand the rules that the game is played with today, then I can play within those rules. If I don't know what the rules are, then it's hard to compete at the same level. And that's the power of this information: is what are the rules that we're playing with, what's happening right now, so that I can strategically compete, whether I'm a buyer or a seller.
Yeah. And I'll show you in a few later slides. I know $662 is an average price point. Makes your stomach hurt a little bit, but that's overall attached and detached for all of Denver Metro. It is not that price for every county, for every home. So just, that's just one marker. That's just one example. But that's not how it is for all of Colorado or even for Denver Metro. This next stat, again, is pretty nuts. Detached single family homes are going on average for $104,000, almost $105,000 more than this time last year. So for all of those people that are saying, I'm going to wait to save for a down payment, or I'm going to wait, I don't know about you, but I am not known to save $100,000 a year. That would be a huge accomplishment for me. And I know some people can do it, and that's amazing. But it's very, very difficult to outsave the market. And think about, if you're coming in at $500,000 this year, you're buying a $400,000 home from last year that's now just priced up. So, with interest rates being so low still, and I know people are probably sick of hearing about that, but that's really giving people an opportunity to kind of offset some of these astronomical appreciation rates, but that's not going to last forever. So, just because it's happening doesn't mean it's ever going to be the right situation for everyone, but it's just definitely something to consider. If you're thinking in the next couple of years, you're going to want to make a move, it might be the time to do it before you get priced out of your neighborhood or the city or whatever that looks like. Just something to keep in mind. That is a massive number.
Yeah, several years ago, I was working with a buyer to purchase a home, and she had some criteria she was looking for, and we were looking at homes and kind of indecisive about making a decision. And it seemed like overnight there were no homes for her to look at because of the price point. And it just moved past her. The homes that she kind of turned her nose up at 2 weeks ago are now out of her price range. And we weren't seeing this level of increase. This is happening at a faster level. To see just how are we keeping pace with the market. I love the fact that you brought up you can't save struggle maybe to save $100,000 in a year. I'm in that boat too. I've always considered myself a consumer. I'm helping to boost the economy by spending money. Yet, right, even if I had saved $100,000, so over the last 12 months, I skipped out on Starbucks. I did a lot more cooking. I ate more ramen noodles. I really crimped and saved $100,000. Great. Now I just kept pace with what the market was over the course of that year. I haven't actually gained anything at all.
Right.
So,
and you talked a little bit about the speed of the market. We're already at and exceeding a lot of our summer speeds with an average days on market or days in the multiple listing service of 20 days. I talked about this last month. The average, I don't feel, is a true depiction of the actual speed of the market. When I hear 20 days, that's almost 3 weeks. That feels historically still very low, very fast. But it makes me feel like I have a lot more time than I actually do. If we look at the median or that middle number, it's 4 days, which is down 1 day from last month. So February was 5. That feels a lot more accurate. So as far as setting expectations, I think the median number is a lot more relevant right now. So yes, historically 20 days as far as how we measure it, and it is an average, is very, very low. But we're talking 4 days for a median here. That's lightning quick.
Yeah, without a doubt. That's moving very, very fast. We don't have time to wait. Things are just disappearing. And it's, again, not that new homes are not coming on the market. They are coming on the market every day.
Right. Yep. So this is our market snapshot that we look at every month. Active is green, pending or under contract is the blue, and then red is sold. So you'll see that our green line just keeps continuing to plummet. We're at just under 1,800 active listings for all of Denver Metro. Now, I was looking at a presentation that I had done a few years ago, talking about that our inventory, what those inventory numbers looked at, and combined, we were at about like 9,000. And I was talking about the year prior, we were at 5,000 and how low that felt. And oh my goodness, if we're talking about a balanced market, we're talking somewhere between 20 and 30,000 homes. And now we're under 2,000, and we just keep dipping a little bit more and more and more under 2,000. So we're at 1,800, which is down 21%, 22% month over month. Whereas pending under contracts are up almost 24% month over month. So that gap just keeps getting bigger and bigger.
Yeah. And we had chatted kind of about what's causing some of these things when we look at the new home constructions that during the last recession were just never built.
Yep.
Right. When they were building almost 1 million homes a year, and then that just plummeted, and that gap that was created when those homes weren't built. And then first-time home buyers that are buying homes and not putting anything back to the market. And then a lot of folks who have taken and realized the appreciation in their current home, their primary residence, $100,000 increase over the course of a year. Well, let's take out that cash and let's go buy an Airbnb, a vacation home, a rental property. So again, they're buying homes without putting something back to the market.
Yep. And we also have the people from out of state that are now allowed to telecommute, from Silicon Valley, Oregon, DC, New York, that are choosing to come inward from the coast, and they're also taking and not giving back. So it's just a few things that are compounding on top of each other, the shortage of the new builds, and then all of these people that are just increasing demand but not doing anything to replenish our supply.
Yeah, Colorado's a fantastic place to live. The secret's out. For those that are watching that believe that it's, when we legalize marijuana, that's not actually the way that it's gone. As a Colorado native, I remember my grandparents talking about the influx of people from California and Texas. It's always been a transplant state. It's a wonderful place to live and to grow up. It is impacting the affordability of real estate, but still, there's ways to get into real estate, even as a first-time home buyer. Even if your budget's not $660,000, you can still get into real estate and get in the game, and eventually, level up to a home that may be that dream home.
Absolutely. So as we kind of go through these slides, active listings, month over month and year over year. So we're at, just like I said, 1,794, just under that 1,800 mark. This time last year, we were at 7,200, which was pretty darn close to what it was even in 2019 at 71, just under 7,200 again. So last year, we definitely absorbed more of our inventory than we have in previous years. We also didn't, if you see kind of these curves, in the summer months, we get a little bit of an influx of inventory coming off of our spring selling season. And that kind of replenishes a little bit. And we just didn't have that same thing. Less people were putting their homes on the market, obviously with COVID, people a little bit more cautious, rightfully so. And then people are continuing to buy. And then all of those outside factors that we're talking about, that we're just so incredibly low right now. If we break it out into detached, we're at under or right at 1,000. Pretty much there's 78% decrease year over year.
1,000 detached homes in 7 major Denver metro counties. Now, I don't know the number to this, and I don't know if Land Title has how many actual detached homes total are in the 7 major Denver metro counties. But we're talking about a very, very, very small percentage when we're looking at 1,000.
Yeah, and if you look at Broomfield, there's 18. There's 18 homes.
So I hope you like, Denver County, Douglas County, Arapahoe, and Jefferson, because that's where most of the homes are.
Yeah.
If you want to be in Broomfield County, start knocking on doors to see who wants to sell.
Well, and Broomfield has really relied on some of that builder business in previous years, and they're just really seeing and feeling that shortage. I know in our area up in Adams County, we feel it a little bit as well with how much new development there has been, and they're really scaling back on the rate that they are releasing those. But 18 for Broomfield. Granted, it's not a massive county, but still, that's not a lot to choose from.
Yeah.
But here's what I wanted to show you, that things can be a little bit different, especially as you break this down. So this is attached single family. If you look at Denver County, it's at 506, which still is not a lot, but comparatively, it's incredibly, it's a lot more than anything else. The next closest one is Arapahoe at 130. So what we're seeing here is, the flight to the suburbs. We saw a little bit that people wanted grass and they wanted more room, so they weren't all on top of each other. But also, in particular, the luxury Denver attached market has a little bit more of a surplus than the rest of the market. So if you happen to be looking for a $1 to $2 million condo in Denver, now is your shot. There's some great opportunity there. But in all seriousness, that is a great opportunity, because I do believe, and we're already seeing it, that people are going to return to the city. There's starting to be life kind of breathed back in. We had opening day, which felt so great. I work right at Union Station, so I really feel the differences that the last year has made. So this opportunity is not going to last forever, but it is one right now.
Yeah, and to your point, we're seeing there are pockets within real estate. There are sub-markets. Now we're looking at the 7 major Denver metro counties and what's happening in a broad spectrum. That doesn't mean every single home is going to go under contract in a hurry and there's 500 offers and $1 million over list price, right? Things are going to happen within the local market that dictate ultimately the numbers that we're seeing here. And that's where reliance on the local data and the local expert make a big difference. And thankfully, Land Title, you've got some great local data stats that you can share with us, as we need, including one that's called The Importance of Pricing, specifically about how you can overprice your home still in this market.
Yep.
You can overprice the home when it comes down to that price, and it'll sit longer on the market. You may chase down and not get multiple offers. It may just get one, and it may not be at list price.
Well, and some psychology from the buyer's standpoint, with media and with all the information that is available, the buyers know on some level, or they're going to find out really quick, that they need to add several $1,000s sometimes in their heads to that list price. So if you price your home like it already has that 5% or whatever that is percent over list price, well, now the buyers in their heads are thinking, okay, you priced it at 550, I have to go up to at least 575. That's out of my price point, but there's this one around the corner that's listed at 525. Let's start there. So while we have a lot of flexibility and a lot of leeway, because obviously inventory is so low, and most homes are selling, and most homes are selling for at or over like 97%, the amount over, or the amount of offers that you get with favorable terms, is truly still dependent on pricing it correctly. So maybe it's 10 grand over, maybe it's 70 grand over. That's a lot of swing. And yes, it's still great that it's over asking, but you just have to take that into consideration when you're pricing. You truly can't price it however you want and still get the multiple offers and everything like that. I've had several conversations with people in the industry that are seeing this, some at higher price points, some, at the $300,000-$400,000 price point, which is extremely competitive. People still see and they appreciate value, perceived or otherwise. And so you just have to be aware of that when making those pricing decisions.
Yeah, and people comparatively determine value, meaning that I'm going to look at this one, I'm going to look at this one and compare value. So if I'm walking through two different homes and one was priced right at where the market is and the other one was overpriced, the buyers are going to walk through and they're still going to say, this other one's overpriced. I mean, look at the last one we were just at. It's 500. This one's 550. Way better value over there. Let's go pay 550 for that one instead of, 550 for this one.
Yep.
They may come to the same number ultimately, but.
Right. So I think that can be kind of difficult to wrap your head around sometimes, but we're seeing it happen. So month supply of inventory for National Association of Realtors, like I mentioned before, they say 6 months or about 30,000 homes. Economists here in Denver think it's closer to 4, so we'd still be at 20,000 homes. Well, we're at about 10 days. Broomfield's at about 6. And some of these other areas, as you look, Denver's a little bit higher at just over 2 weeks. So, it's interesting how big of a difference 6 days and 2 weeks can feel for. They're both so extremely low. And it's almost joking, oh my gosh, 2 weeks, like that's so long, but that can make a big difference in the feeling. So if you're looking for those opportunities for a little bit more of a breath, these are some good stats for that, is looking, down to the county level or sometimes even down to the neighborhood level.
And a home sitting on the market for 2 weeks, people incorrectly blame the house as far as saying what's wrong with the house. The real question is, what's wrong with the price? Because if it's been sitting on the market too long, even if the house has issues, there are no perfect homes. Every home has issues. But even a home that has issues that needs work, at the right price, it will sell. Yeah. So it's a pricing issue more than a house issue. So if you're a buyer and you're not wanting to compete in those other realms, start looking at the ones that have been on the market for 10 days or 2 weeks. Now that may mean you're going to have to do some work, but you're walking into a situation where financially you probably walked into a better scenario, as long as, again, you don't overpay for the home. There's not more cost in rehab and repair, right? But if you have the skills or the ability or the connections and the funds to do it, you may be light years ahead of your neighbor or your coworker who ended up just buying the nice shiny one that everybody else was buying at the same time and throwing all the money at.
Yeah, absolutely. So back to days in MLS, we talked about the average days in MLS being 20. And I still don't feel like that's an accurate depiction of the speed of the market. However, if we look at this historically, just generally, not even at the numbers, but at the shape of the graph, you can see that we are historically lower than we have been. So whether it's 20 days or whether it's 4 days or anywhere in between, the speed of the market is faster than it's been in the last several years. So, just put your running shoes on and prepare for that going in. And then again, break it down to, are you looking in Broomfield where it's 11 days? Again, Jefferson County super tight at 13. And if you go to detached single family, Jefferson County is down to 11 days for average. So I'm guessing probably 2 or 3 days as a median days on market in Jefferson County.
Breakneck pace, right? Things should at some point open up. Now earlier today, I was meeting with a client. They asked me about my crystal ball, and do I believe we're going to continue at this pace forever? No. Do I think at some point this year we will see inventory levels start to climb? I believe so. Now, this is my opinion. I'm Matt Harper. I could be wrong. Just my opinion. I think we'll see that break and we'll start to see things open up. That will not indicate necessarily we're in a shifting market and all of a sudden the real estate values are going to plummet. It just means that things have opened up and we may not see 15% appreciation over the course of a year or 4% in a matter of a day when it comes to list to sales price ratio.
And that's a good thing, right? Like, this is not a sustainable pace. And there's a lot of other issues that arise with it. So a little bit of a slowing, more inventory, that's not a bad thing. That's not something to fear. It doesn't mean that buying a home now or selling your home now is a bad choice. And honestly, we don't know exactly what's going to happen. I think the quickest thing that will probably slow us a little bit is if interest rates peak up. You have to think, for about every percentage point in interest rate increases, it decreases your buying power for about $10,000, which 10%. Isn't a ton, but that is an impact, especially when people are being forced to kind of reach the top of their comfortability anyway, just to get into a home. So if interest rates do go up, that's going to affect things as well. As we look here at our sold data, we're up year over year, month over month, and we anticipate that will continue. Really and truly, our limiting factor on the solds would be inventory. We can't sell what we don't have. So I don't believe that the buyers are going to all go away. Even if some of them go away, we'll still have an incredible demand. But, typical years, discounting 2020 because it's a little wonky, we have this nice little curve and it kind of waves like that. So obviously this year is a little sharper than it has been in past years, but we would typically encounter that those solds would go through May, June, and then start to taper off a little bit in July and come back down. But, just with inventory continuing to plummet, will it plateau a little bit sooner? Will it still go up? That's to be determined, but I don't think I don't think the bottom's going to drop out.
Yeah, I'm kind of expecting we'll see our typical seasonality go, which means we may have a slower second half of the year than what we've had in this first half, and maybe a slower second half than what we seasonally see. But again, not necessarily indicating we're seeing a shifting market and the sky's going to fall.
Back to a kind of appreciation and why maybe I shouldn't wait when I'm looking to buy. This is average sold price, and just for detached single family. And again, there is some variance as far as seasonality goes, but the general trajectory of this graph is continuing to increase. We are at $39,000 appreciation month over month. So again, like Matt was talking, we had a conversation when he was saying we're 3 weeks to being priced out. That's not an exaggeration. And, we're 18%, almost 19% year over year. And even if it has a little bit of a seasonality dip, we're still going up. So take advantage of the low interest rates to offset some of that craziness, if it makes sense for your family to buy right now. Because if it makes sense now, you're probably still going to have to. In 6 months to a year, you're just going to pay more. So, if you look here from January, it spikes up. You can see that it's a pretty significant spike up. So we're running into some of that with appraisers using 90-day comps or comparables. The market is not what it was 90 days ago. It's not what it was 30 days ago. So your neighbor's house down the road sold in January, and you're like, oh, that's great. My buddy should move into the market. Well, that's not the price anymore. We've moved on. We've moved up. So, I think a lot of people say now is a good time. I think there's always, for certain people, there's always a good time to buy, but I don't see it getting cheaper or a better deal anytime in the foreseeable future.
No, and I think overall, big picture, real estate values are going to go up over time. And we look at this graph specifically. Back 6 years ago in 2015, average detached was under $400,000, and where it's grown today, we're going to see. Okay, 6 years from now, will the prices be higher than they are today? Maybe. Over 30 years, most likely, right? So, does it make sense to get in now? Sure, for a number of different reasons. In 6 months or 12 months from now, will it make sense to go in at that point? Yes, for a number of different reasons, right? It depends on what your reasons are. And there's always opportunities to be had in every market.
Absolutely. The last one I want to kind of show, and not necessarily to scare, but just to show kind of some differences here. And again, this is back to percentage sold to list price. So overall for detached single family in Metro Denver, we're at 104%, which is a 1.3% increase from last month. So again, getting more competitive with less inventory and more people in the market. But if you come over here to the left-hand side, depending on, and we could break this down even further into different counties, what that looks like, but in your specific price points, there's different variants there as well. So, with that 500,000 to 600,000 being the most competitive at over 105%, and crazy that $1 million to $2 million is 101%. Like that's nuts. And then you drop down into the 200 to 300 and you're at 98%, which is more historically normal. But there's also not a lot of homes that fall into those price points. Most of those people, most of those people are either first-time home buyers that don't have supplemental cash to make up appraisal gaps or anything, or they're investors that don't want to pay that because there's no emotional connection to the home, or maybe even true necessity. It's all about dollars and cents and if the numbers make sense. So there's also some of that goes into those types of properties. But, we're looking at several percentages over asking for most of our price points up to $2 million.
Yeah. Interesting to see, right, where those numbers have gone. The historical pieces to it, just for context. It's an interesting time that we're in when we look at the large percentage of homes that are going under contract in a week or less and at an over asking price. It's almost right. If you're getting it at asking price as a buyer, that might have been a great deal, right? That might have been a really great deal. And in this market, getting the house is the good deal. Right. That's the good deal. If you're looking for a good deal, it's getting the house right now. That's the good deal. Again, depending on what you had to do to get it, right? If you're strictly buying it as an investment property, you have to know your walkaway number. And you pre-calculate what that walkaway number is. You don't get into the emotion behind it. And because as we look at, the HGTV entertainment piece of it, and some investors that get emotionally caught up and start bidding up and over their number, That's how you get into trouble. Don't do that as a real estate investor.
Right.
Go and find the information that you need and know your numbers.
Yep. So I think, a big takeaway is this Greater Metro Denver report is a great 30,000 bird's eye view of the full market. But if you're really interested in selling your home or buying your home, look closer. Look down to your neighborhood. Look down to your zip code and get some of the true information, because again, you want to set expectations and you want to see if there are opportunity areas. Now that opportunity might look different than it did 5 years ago, but it's all relative. So I think just like anything on the internet in the media, you got to take it with a grain of salt and dive into it a little bit more. And thankfully we have some of those resources to be able to do that.
Yeah. What's the story? What's the real story? What's the story behind the numbers? And, you and I enjoy these conversations. I know that you like looking at the numbers and where it's going to be able to connect in with your clientele, right? Which is a title rep, right? A sales rep for the title company. Real estate agents and lenders are your clientele. But great to be able to provide that resource so that, right, I can educate myself, first of all, and have great conversations with clients about what's really going on in the market and how do we compete in this market, whatever side that we're on, because the rules may be changing every day. We've got to understand the rules that we're in today and change with it.
Yep.
Yeah. So perfect. Well, that's it for this month, right? When we take a look at March 2021 and the real estate numbers for our Denver Metro market. Any final parting words, Brenna?
I got a little bit of taste of the sunshine, and now it's supposed to rain for 4 days, and I'm not here for it. I'm ready for summer. So I'm only happy about the rain because of our trees. We got some new trees, but I'm ready. I'm ready for summer. So
it's kind of like in March when we get that false spring everybody's so excited about, and then shocked when we get the big heavy snowstorm. Happens pretty much every year. This last year we got a massive snowstorm, but kind of that springtime. It's not summer yet. We're going to get some spring showers and it's coming. So excited about the rain. It'll be good for the grass and the new trees, and we can almost always use the moisture. So
yeah, that's true.
All right. Well, again, thank you everybody for tuning in. Those that consistently watch and send feedback, I so appreciate that. And again, we've got some great, exciting videos that are coming up, some powerful interviews that I'm looking forward to. So, all right, y'all, we'll catch you next time.
See ya.